Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US market update. Well, if you've been watching these videos, you know this is not the normal backdrop. I'm actually in the basement of a cabin in the Appalachian Mountains. Talk about social distancing. Holy cow, but I did bring the hat. Anyway, I know this is a weird holiday season for travel, but hopefully you're able to find a way to spend some time with family and friends. All right, to the markets. Today was a pretty interesting day. Let's take a look at the charts. Looking at the chart of the SPY, you can see that we did have an update today. In the last video, we talked about this potential for a melt up into the end of the year. Well, was today the start of the thaw? Is this the start of the move to the upside? Pretty interesting day, not just because it was an update, but let's go back and take a look and remember where we were with this upward zigzag pattern that still qualified. And you can see that where we were over the last 2 weeks roughly is right at that 61.8% fib extension level. So hovered there for a while, broke out today. Now you know we need that second day, so tomorrow's important. At the time of this recording, around midnight on Tuesday evening, the futures are up a couple points, but roughly flat. So tomorrow will be key to see if we continue that move out of this area of congestion. We did make a new closing high today, taking out that high of the 16th. But we haven't traded to a new high from the high of the 9th yet. But it appears that that march to 381 may eventually occur by the end of the year with this melt-up scenario. Taking a look at a couple sectors, we covered this in tonight's Trade Finder. If you haven't attended a Trade Finder, I encourage you to do so. We do them every Tuesday night. It's completely free. We look at the market. We search for live case study considerations. And what we talked about tonight was a couple sectors that are doing really well in the market at this point in time. First of all, the XLE, energy. You can see that breakout move to the upside coming out of this consolidation that we've had through here, going back to right around mid-September. And from that breakout pattern, you look at the DMI, and it's a good-looking DMI. It looks like that move wants to continue, at least to come up and test these highs in the not-too-distant future of back in June. Now, looking at the 10-day moving average, you can see that with that gap up today, little bit overbought there with the separation between where it's trading and the 10-day moving average, but not a whole lot. Just a day or two's consolidation would handle that. But that's a pretty good looking DMI. Not in a 5-wave Elliott Wave pattern, however. But when we look at the XLF, the financial sector, another sector that's pretty hot and doing well right now, you can see we're in a wave 3 to the upside, also coming out of some congestion or consolidation. This time just above where that area of the wave 1 high was. So breaking above there. Looking at that DMI, equally good looking DMI with the ADX moving to the upside, good separation between the directional indicators, and the fact that the positive directional indicator made a nice move to the upside with the up day today. Another little gap to the upside, but it looks like that wants to continue as well. So what we talked about in tonight's Trade Finder was finding stocks that possibly have exposure to each of those sectors, and we actually had a couple considerations that we mentioned that qualify there. Not a bad place to go at this point in time. Now, looking at the financial sector, let's go back and look at interest rates again, because we talked about this before with interest rates moving to the upside. Well, they came back down, and the 10-year isn't an Elliott Wave pattern, but look what happened. We came down, and we basically just closed that gap up that occurred back on the 9th. Took a little while, but we did have a nice looking, just a plain basic set of higher lows there. So a nice looking uptrend pattern and a wave 4 that corrected basically right at the 38.2% fib level. So when you look at this, we'd want to add the DMI in here as well. The interesting thing about the DMI on this chart is on this corrective move here from the wave 3 high, the ADX went down as well. So basically indicating that there really was no strength to that downward move. We're just coming back to earth a little bit after that big gap up and basically filling the gap, as we talk about all the time. Here's the 10-day moving average. You can see that we trade a little bit below it, but back above it today. And looks like interest rates are starting to want to inch back up again. Obviously, that's good fuel for the financial sector. Taking a look at the 30-year, Similar pattern, although not in an Elliott Wave 5-wave pattern, just in a corrective pattern coming out. We talked about this before, coming out of this triangle. Clearly see that triangle with the break to the upside. But the pattern looks pretty similar, and the DMI similar as well, with the fact that the ADX really didn't show any sort of consideration to strength in this downward move. So just a weak move back, correct the gap, fill the gap, and turn around and head back to the upside is what interest rates want to look like they want to do as well. Last but not least, let's wrap up this holiday recording here with the VIX. Really important look at the VIX here, because you can see that we are trying to break below this area of support right in that 22 range. You can see we kind of broke out of it today. Same thing, you need to follow through a confirmation day. Obviously, if the market moves up tomorrow, the VIX is probably going to move down, so the two will move hand in hand. But if we break through that level, this is what I wanted to show you, we're probably going back to levels on the VIX not seen since before the COVID thing happened at the beginning of the year. That would make sense with a melt up, right? Low volume, low volatility scenario. Not completely baked into the cake yet, but that scenario is looking good. If you like this video, give us a like, leave us a comment. If you didn't comment on the last video regarding your view of the melt up, go ahead and leave one here. Do you think that we're moving up towards that 381 area by the end of the year, or is something going to change, turn around? In the next video, I'm going to talk about something that I think may occur in January that we all ought to watch out for. Have a great holiday week. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.